Good morning, ladies and gentlemen. This is Clueless 8, and this is the pre-market AM report for August 13, 2015. On this 15-minute segment, I'm going to give a short market commentary um, and outlook, and as well as go over a few important uh, charts. First and foremost, we are witnessing history. When you have these type of monetary currency devaluations, whether it be a credit adjustment in a large economy like China or in Europe even, or when the Swiss franc was devalued back in January. These are tectonic shifts within the global monetary system that the effects are not felt. Effects are felt years, if months, if not years down the road. Now, for somebody who's not deeply in what should I say? Into global macro finance and all that stuff. I don't want to go into a long-winded explanation of whether it's good or bad. Just remember, countries and nations do what's best for their own self-interest. China felt that because of their sagging growth and their exports and all that stuff to the world, with the global economy slowing down and things like that, and after all, China is still the world's largest factory for global manufacturers, including U.S. Take an example, Apple. Um, they felt that if they devalued the currency, they would make their products cheaper for foreigners to go ahead and buy from them. It's really as simple as that. The other reason is that nations around the world, including European nations, have been actively devaluing their currency by cutting interest rates, doing all kinds of stimulative measures, which have depreciated their currencies. Look at the euro, for example. So China falls into a competitive disadvantage if they don't go ahead and devalue their yuan. So they went ahead and did that. Now, the key is to keep in mind there's good and bad. The good part is that you have a situation where global manufacturers all of a sudden their supply chain management and their sourcing costs, i.e., their production costs in China, because that's where they're making a significant amount of their stuff, just suddenly went down because with their stronger currencies they're buying more. On the other hand, you have a situation where foreign goods in China are all of a sudden more expensive. The bottom line is that when you have these type of adjustments, they are felt immediately in the world markets. We saw that clearly. The People's Bank of China came out early this morning. Their Our middle of the night, their early morning, and they basically tried to reassure the global markets that they're not on a one-way devaluation phase. What they basically did was they pegged their currency to other global currencies, including the US dollar. So let the market decide. Let the market decide where the currency should be. So it's a floating peg. It's not a fixed peg. So the bottom line is that if you're a true free market capitalist, then you actually like that. Let the markets decide where the price, where the supply demand is, and what the price discovery is. In other words, where should the currency be? So, some people will make the case, the bulls will make the case that this is a fantastic way of bringing China into the true international markets. And make their currency a free floating currency that will be that'll go up and down with the market just the way ours does, and the other European currencies do. And some other people will basically make a will take the bearish argument that China, is basically trying to make themselves more competitive by hurting other emerging countries and such by devaluing their currency, because the emerging countries also at that point, they have to devalue their currency, so it's deflationary. Anyway, that's all macroeconomics and stuff. Let's see what's going on here right now. Bottom line is, yesterday was a phenomenal day, and people, I'd like to point this out over and over again. I deliver extremely precise tactical charts. All through the day, I'm engaging up, down, sideways markets, I'm there. So the key ingredient that you have to ask yourself that makes you not participate or make the maximum amount of money with these type of massive hammer reversals that I showed, pretty much give or take at the bottom, and not taking advantage of that and waiting for some sort of nirvana or some sort of, perfect moment. Let's put it this way. It is actually dangerous for a trader because what you did, or I would say a good portion of you did, I think, is that by not participating to the fullest on the recommendations that I gave out there. And remember, these are selective recommendations. I'm not going out there and saying buy 50 stocks. Not every one of my stocks are going to do what it's supposed to do, but I'm talking the majority of them. And if you're not really, and if you want to take out the individual stock situation, you can play the indices. You can play the SPYs, the SPX, the SPX, S&P 500. You can play the SPYs. You can play the IWM. You can play the QQQ. You can play the RUT. This is Russell 2000. And make a substantial amount of money. Making 100, 150%, 200, 300% from reversal bottoms on calls that go from 1 to 3, from 3 to 9, and you miss out on that type of stuff, you really have to check and see what is going on. Now, what's going on is mental. This is behavioral finance at its best. The way I like to put it, it's not the charts. The charts are there. The content is there. I'm providing some serious equipment, some serious tools for you to build your own house, to build your own car, to basically move forward, in my opinion, to build profits and incremental wealth. And most importantly, build confidence, because confidence is the most intangible asset and the most powerful asset you can have in anything in life, but more importantly in trading. When you have confidence in trading and you captured that fat profit, and you see some of these people who are doing it, okay, in the room, because they're posting it. A lot of people, I'm sure, are doing it too, but they're not posting. They feel great. They want to go into that next trade saying, you know what, I'm going to make that couple of grand. I'm going to make that couple of $100. And chances are, it's a high probability they will, because they won't do stupid mistakes and not carry the baggage of missing out the trades, missing out a massive 275-point reversal, if not a 300-point reversal at one point, and then going into the next trade with a long face and a mopey face and stuff like that, and the trade doesn't work. Remember, forecasting in this business, which I do a pretty good job overall, both in the markets and individual stocks. No question about that. The track record's there for anyone to see. Forecasting is basically what's the word I should look for? Is calculating a range of probabilities, a range of possibilities, and then looking to see where your risk reward is. So when I'm evaluating a range of probabilities, not just in the charts, I'm working extremely hard to process a significant amount of serious economic, political, and financial stock market information to provide at a forecast that's going to benefit my traders and my members, and of course myself. And guess what? When those forecasts are so accurate, overall, up and down, remember we were short S&P calls as hedges, with limited, I remind, limited long positions going into yesterday morning. Do not carry overweight positions overnight, because you don't know what's going to happen. Yes, markets are slightly green right now. Futures were up 6, now they're up 1. Whoopee. Does that mean the world's ending? Does that mean that we're going to go up 500 points? Neither. You have to be a technical trader in these markets. You have to adapt to situations as they go. You have to keep some swings out there, obviously. And you have to go with what I'm showing here on the charts. So if you don't spend enough time on studying the charts, trying to enrich your mental intelligence and your emotional quotient, which I call EQ, then you will never be successful as a trader. And that's it. I've never minced words. I'm telling you guys straight out, because I'm here to help everybody. Ask everybody who's worked with me on the advanced coaching sessions. It's not just my passion. I want to go ahead, and I'm not some charitable socialist. I'm a pure full-time capitalist. I believe capitalism is personal responsibility, personal enrichment, and then you go ahead and take that and you give it out to people. That's called benevolent capitalism. We're not a bunch of socialists here. This is America. So what it comes down to is help yourself build your own house. Don't look for little, don't sit there in the bunker, in the cave all the time. Because you know what? When markets are up here, and you're looking at the picture of the Dow Jones Industrial Average here, obviously, when the markets are up here and I say short, everyone's like, I mean, that's what I feel. I've seen it. Does everyone jump in and feel all excited by shorting the market at these levels? No. And then market collapses, make a ton of money, and then the rest of them come in at the last minute, majority I'm talking about, and try to make a few crumbs. And then the market turns and their confidence is shot. So when you can't make money off the top, you can't make money off the bottom, you have to ask yourself, how do you change? If you quit, you're a quitter. That's it. Trading is a marathon. It's not a sprint. And you have to really train for it. So if you're not ready to train for it, then you'll make some good trades. You can follow this directly, what I'm showing, and you're still going to make money, but you'll never learn the real tools of how to do it. So let's go over the charts here. And again, I mean this all in good faith, and I'm a well wisher to everyone, and people who have worked with me know that very well. On that note, I highly recommend every single Clueless 8 member should join the group coaching sessions. Understand how I draw these things, what the methodology is, what to look for. It's not that hard because many who have done it, they're actually doing much better. Read the testimonials. So highly recommend, sign up with the group coaching sessions that I have on the weekends. And for that piddly little amount of money, you're going to, in my opinion, if you effectively use it, you're going to make yourself a significant amount. You're going to change the way you trade, and you're going to make yourself large amounts of profits. You don't have to put in large amounts to make large amounts in this market. You can put small to moderate amounts and bring out large amounts. When you have 100, 200, 300% type of ROIs, return on investment, intraday or intra-week, it's you don't need to put in huge sums of money. So we had a huge. So let's get to I'm going to walk you a couple of the charts from yesterday too. We have 3 minutes left here. So you have a large reversal candle. It's pretty serious, okay? And it's massive short covering. And then you enter this broad channel that we're traveling in. So the bottom line is that at this point, I am looking at a declining. This is negative. This is a declining 50 and the 34-day line. That's where I have the arrow there. So most we can get up to, in my opinion, is test this uptrend line, and this entry into the uptrend line might be rejected because we have the 50 and the 34 on the first attempt. So we might fall back again. Okay, and then we could do this, try to attempt to get back in again. Second attempt, maybe slip back in. So that would be up here. Okay, and then who knows? Maybe you come down again, and then we start to move up. But one with the other, I believe that at least over as we cross into the latter part of August, I expect the market to at least get towards 18,000. What happens above that, I don't know. Now on the downside, when you have these power hammer reversals, okay, like this one's really powerful. You generally don't go back and retest that again, but there is a possibility of doing that. Remember, Mr. Volatility is not called Mr. Volatility for no reason. So we could very well come down, test 17,000 again, and let's see what happens. If we hit 17,000 with the thump and we slip, then obviously things get really, it gets pretty dangerous. Because at that point, we have its 1,000-point drop or a 1,200-point drop, similar to this 1,200-point rise we had here. Do I see that happening right away? No, but it's always something to watch for. So the bottom line is we have to watch these lines. You have to watch the charts and look at the inflection points that I draw in order to determine what's going on. That's what's going to help you manage your trades. That's all I have to say today. Thank you for listening, and sign up for the advanced coaching sessions. Have a great trading day, and don't wait for the perfect moments. Act like a lion, not like a sheep.